Opendoor stock has delivered yet another powerful session, and heading into Friday, the setup could be historic. After an incredible rally on Thursday where the stock surged by 16% to close at $5.96, Opendoor carried that energy into the aftermarket, climbing another 22 cents, or about 3.8%. That move puts the stock right on the doorstep of $6 per share, a level we've identified as the new battleground. What makes this even more significant is that if Friday finishes green, it will mark 5 consecutive winning sessions for Opendoor, a streak that would highlight not just technical strength, but the expanding conviction of the retail movement that has transformed this stock into one of the most exciting stories in the market right now. So let's break down where we are heading into Friday, why retail enthusiasm continues to grow, what leadership has done to maintain momentum, and why the next steps for the board and the CEO search will be absolutely critical in determining how far this rally can go. First, the stock action itself is worth celebrating. We've now seen a clear pattern of resilience forming. Earlier this month, Opendoor established support around $3.50. Then it moved up and found footing at $4. Last week, it was $5 that became the key level. And now, with the stock consistently trading above $5.50 and testing $6, the range has shifted higher again. This stair-step progression is exactly what healthy rallies look like. Each time the stock surges, it consolidates at a higher base, and that creates the conditions for another push upward. The aftermarket action on Thursday was especially telling. Normally, after a big green day like we just had, you might expect profit-taking to dominate. Instead, buyers continued to step in, pushing the stock closer to that $6 mark. That tells us retail isn't finished. In fact, the opposite is happening. Retail enthusiasm is compounding, with more and more investors joining what has been dubbed the Open Army. And at the center of this energy is Eric Jackson. For nearly 2 weeks straight, Jackson has been relentless on X, posting updates, rallying new investors, and creating a drumbeat of content that has kept Opendoor in the spotlight. His campaigns, whether it was standing outside Drake's mansion or now openly pushing for Keith Rabois to rejoin the board, are unconventional, but they're working. Every day, more people are becoming aware of Opendoor, and many of them are buying shares and joining the movement. Jackson has essentially built a decentralized promotional engine that runs 24/7 on social media, and the effect on the stock is undeniable. Of course, retail enthusiasm alone can't carry a stock forever. The company itself needs to show it's responsive, engaged, and capable of executing a strategy that makes sense in the long run. And that's where Interim CEO Shrisha Radhakrishna has stepped up. Since taking on the role after Carrie Wheeler's departure, Shrisha has balanced his corporate responsibilities with a genuine openness to the retail community. The launch of the new Opendoor Community Hub this week is a great example of that. It's a central platform where shareholders can find updates, letters, FAQs, and strategy notes directly from the company. That might sound like a small step, but for retail investors who often feel shut out by corporate silence, it's a massive signal of transparency. Shrisha has also been active on X, responding to comments, acknowledging platform feedback, and leaning into the conversation. It's a refreshing change. Too often in the past, Opendoor leadership has been accused of staying in a bubble, ignoring retail, and sticking with a one-size-fits-all narrative. Shrisha has changed that in just a few weeks. And while he is only the interim CEO, the way he's carried himself has made investors feel like the company is finally being steered by someone who understands the importance of transparency and connection. Now, let's talk about the board and the CEO search, because this is where the next big catalyst lies. There's increasing pressure on the board not just to appoint a permanent CEO, but to appoint the right one. Eric Jackson has made it clear in his meetings with board members this week that retail expects bold leadership, someone who can execute a pivot toward an asset-light, AI-powered real estate model that breaks free from the capital-intensive iBuyer framework. That's the vision retail sees, and that's the vision they're demanding. Speculation has continued around names like Keith Rabois, who was instrumental in Opendoor's founding. Rabois himself has been more vocal in recent days, offering critiques of the board's risk aversion and suggesting that the company needs to embrace bigger, bolder moves. The fact that he is even in the conversation, and that Jackson has publicly floated the idea of his return, shows how much influence retail has already had. Whether or not Rabois rejoins the board, his engagement adds legitimacy to the retail movement's demands. The board has also faced growing calls for reform. Investors want to see board members show skin in the game by buying shares themselves, and they want to see less reliance on consultants and more alignment with shareholder vision. Shrisha has hinted that more board members will indeed invest personally, following his own insider purchase last week. Moves like that matter, because they show confidence, and they build trust. The CEO pick, though, remains the ultimate test. If the board chooses someone who embraces innovation and aligns with retail's vision, it could unleash another powerful rally. If they choose someone more conservative, it could risk undermining the progress that's been made. That's why there's so much anticipation around the announcement, and why Jackson has suggested it could come within days or weeks. So, where does this leave us heading into Friday's trade? First, the possibility of 5 consecutive green sessions is symbolic. It shows that this isn't just a flash in the pan. It's a sustained rally driven by conviction. Second, the $6 mark has become the immediate level to watch. A decisive break above 6, with volume, could set the stage for a move into the 7s, especially if retail keeps growing and catalysts keep lining up. Third, the fundamentals of the story continue to strengthen. Transparency is improving. Leadership is engaging. The board is being pressured to evolve. And retail isn't just holding the line, they're expanding, with more investors joining the movement every day. Finally, the broader market context shouldn't be ignored. While other sectors have been weighed down by uncertainty around rates and economic data, Opendoor has become a standout, moving against the grain. That kind of relative strength is exactly what gets noticed by traders and institutions who may start to see this as more than just a retail phenomenon. In conclusion, Friday's pre-market setup for Opendoor is one of the most exciting we've seen yet. With the stock climbing in both regular and aftermarket trading, with retail energy stronger than ever, with Shrisha reinforcing transparency, and with the board under pressure to deliver a bold CEO pick, all the elements are in place for momentum to continue. If Friday does indeed close green, 5 consecutive winning sessions will underscore just how powerful this movement has become. So, the takeaway for investors is simple: the story is evolving, the momentum is building, and the catalysts are aligning. Opendoor's journey is far from over, and the potential upside from here remains substantial. Watch the $6 level closely, pay attention to any board or CEO news, and remember that what we're witnessing right now is a retail-driven transformation that could redefine how this company is seen in the market. As the Open Army continues to grow, Friday could be yet another chapter in what has already become one of the most compelling stock stories of the year.